Hey, everybody, and welcome to another episode of Live Charting, the show where you pick the tickers and we chart them out for you. I am your host, Jason Kretzky, and we are joined tonight by an absolute legend in the finance community. This man is a wealth of knowledge, and we are so honored and lucky to have him on the show, Mr. JC Parets from All Star Charts. JC, my man, how are you doing tonight, buddy?
What's up, Jason? Thanks for having me. I appreciate it. We're going to take a look at some charts. Got a little vino. Salud. It's going to be awesome.
You're ready to go, man. I'm so psyched to have you on the show tonight. I have to assume that most of the people that are watching or tuning in are familiar with you, familiar with your work. But for those who aren't, maybe give us the old elevator pitch. Tell us a little bit about yourself and All Star Charts, what you guys do.
Yeah, no, I mean, it really started out as a blog back in 2010, believe it or not. Just kind of a way to share ideas and, share, charts and trades that I was seeing in the market, with the community and just really contribute to, just a whole lot of blogs and Twitter and stock twits back in the day that I was a consumer of, but I never really participated. And then around 2010, which in hindsight was pretty early on, but it had already been around for a couple of years. And I was able to really contribute, and one thing led to the next, and people were asking for more. So we, became more structured over the years to the point where now, I have a 30 team analyst,
Crazy.
arm. I mean, it's unbelievable how far we've come, and the fact that I can just talk to really smart people every single day, both the ones that work with us, Steve Straza, Ian Cully, Willie Delwich, Rashmi Shastri. Louis Sykes. I mean, you guys see them on Twitter. A lot of the team that, Alfonso, right? Grant, just shout out everybody. I mean, it really is awesome. And then, of course, because I've been, really part of the community and traveled around the world, throughout Asia and Europe, meeting just other contributors to, financial media and financial Twitter and just the conversation that's going on every single day. When you actually meet these people in person in Paris or in London or in Athens, it really is a lot of fun, and you develop really great relationships like that. And, whenever I have questions about bonds, I know which bond guys to go to, or bond gals in some cases. When I have questions about volatility or some areas, because, as traders and investors, we have some areas where we're stronger than other areas. That's just what it is. So I tend to have a lot more questions when it comes to bonds and volatility, because those are just not areas that I feel really strongly in when it comes to other types of markets. So I have my people that I ask. And same thing with stocks, by the way. It's not like I'm like Mr. Stocks guy. When I have questions about the stock market, it's pretty awesome to have really smart friends. So I'm incredibly blessed to be the CEO of allstarcharts.com. It really is a dream come true to talk to these investors. And what's cool is that our clientele runs from the biggest hedge funds in the world, literally the biggest banks, the biggest of them all the way down to individual investors that are first opening up their brokerage accounts and trying to learn, right? We have a whole educational arm, and then everything in between, right? We have a lot of financial advisors that come to us for our model portfolios and things of that nature. So what ends up happening, because I'm the CEO of this company, is that I get to talk to investors from all kinds of, across the spectrum, and it really, from a sentiment perspective, to understand what the institutions are doing, from a sentiment perspective, to understand what individuals are doing and how they're thinking, and trying to bring it all together is part of what we do as technicians. It's not just, squiggly line up, squiggly line down, support, resistance. Well, that's a lot of it, and that's what it comes down to in price. It really is sentiment that's driving these things back and forth. Those unwinds from extremes can be very powerful. So we pay attention to that.
Yeah, for sure. And I mean, that's why I'm so stoked to have you on. You really have a full world view of what's going on, not just the US markets, but all over the world. So with that in mind, let's kind of talk real quickly. We're not talking about the world. Let's talk about the US markets. Let's talk about SPY. How do you feel about SPY right now? What do you see going on with it? What are your expectations here over the coming, I guess, over the summer?
What the way I like to look at it is, I think we need to realize as investors that the S&P 500, sure, well, it's an index, it's an ETF that we can trade. Really, what it is, it's a basket of stocks, right? This is a market of stocks, not just a stock market. So, just mathematically speaking, if the S&P 500 is going to go up, you need more stocks making new highs than making new lows, right? That's just what it is. You need more stocks going up for the indexes to go up. But what's happening? We have 31 consecutive weeks of more stocks making new lows than making new highs. That's just not going to lead to a sustainable uptrend. In bull markets, you see the exact opposite, right? The market peaked here. We're looking at the S&P 500, and you could see here that it peaked what in January, right? In January of this year, right? You kind of had that peak in December, January. The all-time high monthly close was for December, right? But the truth is, the market peaked in February. That's when the list of new highs peaked. That's when the NASDAQ advanced decline line peaked. That's when Chinese internet peaked. Biotechnology, the IPO index, all the ARK funds, the advanced decline line in the NASDAQ, all of them peaked in February of 2021. So we're almost 17 months into this bear market, right? People are like, oh, it's not a bear market until the S&P falls by 20%. I don't know who invented that, but that's not a thing. Like, if you think that way, like, that's how serial killers think. Like, that's not anything logical. 20%. Like, why not 19.5% or 20.3%? It's the dumbest thing I've ever heard. It has nothing to do with that. You know what a bull market is? When most stocks are going up, right? Yeah. You know what a bear market is? When most stocks are going down. And guess what? Have most stocks been going up, or have most stocks been going down, right? We've been in a bear market. Like, we have the data, but like also common sense, right? So the bottom line is we can draw support levels and resistance levels and all these things, but until we start to see more stocks making new highs and stocks making new lows, the S&P 500 isn't going higher.
Right. You have these zones, though, drawn out. So are these some kind of expectation that you have in mind, or is it just based off of previous kind of highs and lows?
Yeah, I mean, listen, here are the highs in 2000, here are the highs in 2007, right? The 161.8% extension of that takes you to the 2015 highs, right? Then the 261.8% extension takes us to the next highs. Like, these are really clean levels. And right now we're pretty much in no man's land. So that, you know, it's anybody's guess as it can go higher or lower. So I think it really comes down to your time horizon, which I think gets forgotten. It's like, oh, JC, like, is Apple going to go up? And it's like, well, like in the next 5 minutes or like in the next year? Like, what do you mean? So like, you know, when we talk about, you know, technical analysis and analyzing trends, it really comes down to what's your time horizon? Like, what, I mean, here we're looking at monthly charts going back 20 years. Some people are looking at the intraday chart from this afternoon. Right? And there's, you know, at the end of the day, what's cool about technical analysis is that markets are fractal. So the same patterns and support and resistance levels being impacted, when you see that in monthly charts and weekly charts, you're also seeing that in 10-minute timeframes as well.
Got it. Right on, man. All right. So got a little bit of your view on kind of the state of things. Let's get into the voting, but before we do, let's talk through how the voting works. If you've watched the show, you know how it works. If you are new to the show, the way that the voting works is pretty simple. You can vote for 3 symbols per round. 1 round is 1 ticker. You do have to vote for 3 unique symbols. You cannot vote for the same symbol 3 times, but you can vote for the same 3 symbols as many times as it takes for us to get to review them. We're going to be doing this for the next hour or so. We're going to get to as many names as we can. So thank you all for tuning in. We do really appreciate it. And very quickly, even before we get into the requests, we do have a 50% off deal going for the 4th of July, for Independence Day, 50% off for 24 months. If you are not a TrendSpider user, now is a primo time to be taking advantage of that deal and getting yourself on the platform. So with that, we're going to go back to JC here, and we are going to go to the first pick of the night, and it is NIO. We were talking about Chinese stocks kind of before we started streaming here. So let's go to NIO. It's one of the big ones. You said Chinese stocks are like Notre Dame.
So yeah, because you know, Chinese stocks, like, are they emerging markets? Like, I know they're the biggest component of the EEM, but are they really emerging markets? They don't trade like other emerging markets. And when you think about it logically, like the size, sheer magnitude, and the correlations, they don't trade like emerging markets, but they don't trade like developed markets either. So it's like Notre Dame, right? You know what I'm saying? Like, they're not in the ACC, but they play an ACC schedule, but they're not in a conference. It's complicated, right? Kind of like China.
Right on. So what do you think about NIO here? I mean, I've heard a lot of talk about these gap and goes from back in middle March or so. We pulled back, we retested kind of those gaps and forming some pretty decent looking bases here.
You know, what I will tell you is I notice how you were, you know, well, of the Chinese stocks, you see how NIO bottomed out in March, right? When you look at its benchmark, you see how it bottomed out in March and then made lower lows in May. When you look at its benchmark, Notice how Chinese internet made its low in March and has been putting in higher highs. So when you look at China, you're looking at NEO as an underperformer, right? Look at the FXI, bottomed out in March, putting in higher lows. So then when you look at NEO making lower lows, that's relative weakness. So in my opinion,
Right.
if you're going to be in China, I think you really want to be where the relative strength is. That seems to make more sense to me, right? Look how Alibaba made higher lows, for example, right? Look at how JD made higher lows, for example. So for me, I'd rather be in the relative strength. That's how I think.
One thing that I've heard a lot about, especially I was hearing a lot about back in March when these things were really, really making lows, was Chinese ADRs being delisted. Do you have any opinions about that? Or was that just kind of spit out into the news cycle because smart investors saw the writing on the wall and said, hey, if we pump them with this information about ADRs getting delisted, we could get really great deals on all of these China stocks that are
Yeah.
not going to get delisted.
Yeah, kind of like Russia. So that, they were delisting the Russian stocks when they invaded Ukraine. So they're like, if China invades Taiwan, same thing's going to happen, right?
Yeah.
Well, ever since those rumors were put out, Chinese stocks have done nothing but go up. So
Right. Yeah. I mean, so then that is not a
50%,
rumor.
by the way. We're talking
I'm
about
sorry.
50% in the last 3 months for Chinese internet.
It's crazy.
That's not
That's
nothing.
that's
While the
not nothing.
Nasdaq has made new lows. See?
Do you
While the Nasdaq has made new lows. See?
are those rumors to you kind of just null and void? Like doesn't really matter?
Yeah, I don't I mean those, rumors don't play any role in our analysis whatsoever. We don't care.
Okay, right on. Yeah, just kind of curious.
Yeah, yeah,
All
yeah.
right.
What am I gonna do with that? I mean, it gets fun to be like, oh, ha ha, but like, you know.
Right. Yeah. I mean, it seems like I said, it seems like smart money saw a really good opportunity to scare any retail out of it and came in and bought them up. That's what it seems like to me. But, I'm not an expert on these things, but you, my
Yeah, I mean,
friend.
I don't know who's manipulating markets or not. I mean, all I'm seeing is relative strength. Look at the Nasdaq making lower lows, lower highs.
Right.
The Chinese internet making high. So, for me, that stands out. So I
Yeah.
think, and then the other thing really, when we talk about if you really want to get down to it and you really want to party, I mean, if you're going to hang out with JC,
Do
where's the
do
dollar index?
do $ DXY.
$ DXY. No.
Oh,
USD.
hmm.
US. You know what I'm talking about. Or
I do.
Dixie Futures.
And it's breaking out.
Um, I guess you could see euro. You could see it in the euro. So no, I got to get the dollar index. Listen, the bottom line is the dollar index is really what you want to follow because the negative correlation that we've seen between the US dollar and risk assets has been super high. So think about it like this. I mean, I wish I could pull up the dollar index here. You know what? I could pull up the UUP, which is the ETF. It's not the cleanest.
Okay, that
It's not the
works. Yeah.
cleanest, but you get the idea.
Yeah.
The dollar peaked in 2017, right? At the end of
Right.
2016, early 2017. If you recall, this was after the Trump election. So then stocks really ripped during this entire period. Stocks ripped and the
Right.
dollar got slammed. And then what happened at the beginning of 2018? The dollar bottomed out. And that's when stocks peaked, right? And really had a terrible few years. And then when did the dollar peak? After COVID in March of 2020. And then what happened after March of 2020? The S&P 500 saw its best 52-week period in history. What
Yep.
happened to the dollar during that period? It was weak. And then a funny thing happened last spring. The dollar index bottomed out. Stocks have done nothing but go down ever since, and the
Yeah.
dollar's been ripping. So if you see the dollar breaking out of this monster base, I can't imagine that's happening in an environment that stocks are doing well. So if you ask
Right.
me where stocks are going, I think all eyes are on the dollar.
Yeah, this is something that I've learned relatively recently. I was just talking to my parents on the phone about this earlier today. Like, even there's a lot of people that don't really understand the correlation between the dollar and stocks and how they affect one another. So it's interesting, it's definitely something to keep an eye on. Do you have an expectation? Because to me, as a technical guy, we are coming into a really important resistance area. I would anticipate the dollar would fail here, but who knows?
Right. So this is just the ETF of UUP. So I would look at the dollar index futures. You're going to get a much cleaner resistance.
Mm-hmm.
And so far we're holding above it. But to me, if people are wondering about the correlation between the dollar and stocks, just understand that it's constantly changing. It's just been very highly negatively correlated for the last half decade. And it continues to be. The market continues to prove that. So you can be in one of three camps, really. You could be like, there's no correlation. That's a bunch of BS, JC. All right, fine. Ignore math. And then you could be like, oh, yeah, the correlation's been in place, but it's about to change, right? You could be like that. Or you could be like what I think, and it's that the correlation is going to stay in place, right? And we'll let the market prove to us that the correlation's changed, but it hasn't, right? So that's really what we're focused on. And if the dollar's breaking out of this monster base, I can't imagine that's happening in an environment that stocks are doing well. I think they're under pressure.
What would cause them to not become correlated in the way that they are now?
I have no idea. For
Okay.
me, I'm not really interested in the why ever. Really,
Yeah.
I'm more interested in sort of the what, and what can change the correlation. I really have no idea. We won't know till after, really. So, for me, we're going to bet that correlation remains in place until the market proves that that's no longer the case. And maybe it will, maybe it won't. But I'm not just going to bet that the correlation is going to change overnight. Like, that's not the bet that I'm going to make. I'm going to bet that trend remains in place, because we know how trends work around here, right?
Yes, sir. Right
We have
on.
a damn company name after trends.
Right on. All right. Well, let's go on to the next name here. And the next name is AFRM, AFRM. Whew. That's it. That's all there is. That is one ugly, ugly chart.
Yeah, I mean, these are weekly charts. I think from a multiple time frame perspective, I think it's important to look at markets to start, from a longer term perspective and then work your way down.
Mm-hmm.
FRM. So here we're looking at so this is a software. How big is this company now? This is a $5 billion software. So part of the problem is that it's in the worst sector in the world, right?
Right.
This is just a downtrend. I mean, there's no way around it. You want to talk about, support and resistance,
Right.
Right? Here's your support. We broke down, kicked at resistance. So now we're stuck here. And then, you can, really
Yep.
give you one of these guys, right?
Yep. Yeah. Sometimes it really is just as simple as just seeing where the pivots are.
Right? It's really all
Right.
it is. So if we're able to get back above these levels, it could work its way back up towards, 49, 50. Right. But if
Right.
we're below these former lows, this is still a downtrend, right? That's how I see it. There's nothing, there's nothing to do there. You can change
Right.
it to the daily time frame.
I mean, kind of looks a little like a very small amount like some of these Chinese names, right? You have that gap and
The
go.
difference is in China, they bottomed out in March and have been making higher lows
Right.
ever since. You see how a firm is making lower lows, lower highs, is a hot piece of garbage.
All right. So we just need to see some higher highs and some higher lows.
You see the difference, right?
Oh,
Like, look
yeah.
at a
Yeah.
firm making new lows in May and just kind of hanging out here in new lows. And
Right.
then you look at, you see how it bottomed in March as we're making higher lows. You see the difference?
Oh, yeah. Oh, yeah, for sure. I guess I'm kind of transposing K-Web in March to a firm in May.
Yeah, because the way I see it, all these charts look the same. You nailed it. So the ones that don't look like that are the ones that have my attention.
Yeah.
See Robinhood making lower lows, lower highs.
Yep.
Another one of these hot pieces of garbage, but that is showing some relative strength. Not as much as China, but
Interesting.
biotech pushing up against these highs. You see that?
I've not seen that, but I mean, dude, everybody's been talking healthcare names here. I mean, I don't know, healthcare and biotech kind of slightly two different worlds, but
look at healthcare going sideways while the S&P 500 has been going down. Right? You see that? We call that relative strength.
Right.
So in fact, healthcare relative to the S&P 500 made new 2-year highs last week. Actually, may have made 2-year highs this week too, actually, but regardless, last week.
Crazy.
Because it's going sideways instead of the S&P 500 and NASDAQ that are going down. We call that relative strength.
Right.
Now, with that said, think about the type of market environment we're in, that the best performing sector that we can think of outside of energy, the best performing sector that we can think of is healthcare. Like, is that the type of leadership that you're looking for?
No. I mean, I don't think so. I've historically never known healthcare to be the greatest thing to be investing in, but I guess if you were buying Moderna in March of 2020, that was pretty killer investment.
There's a time and a place for everything.
Right.
These healthcare stocks are working really well. And then the other one I'd point out is small caps.
Yep.
So look at the level that we're at in small caps. You can't make this stuff up. See? Right? So here's your 2018. This is your late September, early October highs in the small caps in 2018. Same exact levels pre-COVID, right?
Right.
Double top failed. And now what are we doing here?
Finding support.
Trying to.
Yeah. Trying to.
Yeah,
the
charts.
Little bit of a breakdown there. Just out of curiosity, like what do you need to see for this to fail? If this fails here, what tells you that it fails here? Does a monthly close below that area tell you that it fails? Does a breakdown and a retest and then a failure tell you that it fails? How do you gauge that sort of stuff?
I mean, listen, I wish I could tell you that there was a fast rule. It really depends on your, how much leverage you have, whether you need to be super disciplined with an exact level and then just get out and be willing to get back in and get whipsawed. If you position size more responsibly, I should say, then you can give it a little more wiggle room. So it really depends on how you're executing. For us, like when it comes to options, all of our options trades, the position sizing is very responsible. So we wait for a close before taking it off a position, and then we'll close it the next day. So it'll be on a daily closing basis. In other cases where we're not as fixed and we can kind of just like eye it, in cryptocurrencies, for example, I don't like to use stop losses. So if it breaks a level, I'll just get out, right? So no questions asked because of the volatility there. If you're in the futures market or the Forex market where you're very leveraged, you probably want to be more disciplined with more exact levels. If you can position size more responsibly, like we do in some of our strategies, closing basis is fine, weekly closing basis, right? So it depends on your strategy. I mean, we have a strategy that follows a 10-month exponential moving average. So we're looking at monthly closing basis to make decisions. So, and right now it's in cash, right? It's been in cash for months.
Yeah. What can you speak to why you don't use stop losses with crypto?
I just don't trust the exchanges.
Like you think that they're literally stop hunting you. They know where those stops are and are coming for them.
Yeah, I'm just being a boomer.
Okay.
Yeah. We all have our quirks.
Yeah, and that's not unreasonable, man. Especially with what's been going on lately with so many of them getting liquidated. Who knows what they're doing in the background?
Who knows? Right.
Reasonable. All right, let's keep moving here. PLTR.
So anyway, one thing I wanted to say real quick before we moved on is that when you look at the small caps, right, you can make a similar argument with the financials, right?
Mm-hmm.
And then these financials, you can go all the way back. You're gonna go all the way back to the 2007 peak.
That's kind of crazy.
So these are really important levels. So like you were asking about the small caps, if they don't hold, like what are the implications? Well, we can argue, these are just as important, if not even more important, because in the United States, we don't have bull markets without financials. So the question is that actually gonna, right?
Oh yeah.
Question mark.
and banks all have earnings coming up here quite soon, right? Next week or two.
Oh, it's the lack of earnings, I think, that they're expecting, my friend.
Well, yeah, maybe so. But Well, this may be decided sooner than later, is I guess what I'm trying to say.
Yeah, I think we're gonna have some good information soon, no doubt about it. Speaking of hot pieces of garbage, this is the volunteer that you were asking me about. I don't know
Uh-huh.
what all these annotations. I mean, just look at this. This is just a complete disaster. So once you broke this, there was just really nothing to do there.
Right.
You know, once you broke in, that's it. It's a downtrend ever since. Like there's just nothing going on. Like, man, like this is for masochists. On this, like, what do you know? If this is the stuff that you're buying, you know, you should probably seek therapy, right? Like, I mean, come on. Like, it's just there's just nothing. Like, there's just no reason whatsoever to support, turn into resistance. This one couldn't even bounce up to former support. This hot piece of garbage. Look how weak that is. We broke down, fine, successfully retested, roll over again. Like, I mean, listen, if we're above 10, yeah, if we're above 10 and you want to give it a shot, give it a target at like 17, you know, if you really need to be a junkie about it and you got to be buying this crap, like fine, buy it above 10, but not below 10.
Yeah. I mean, even just having those sorts of rules is really, really, really important. Being able to kind of make that assessment, right?
Like, I mean, there's just nothing there. I mean, if this is what you're buying, like, you know, these are shorts, you know?
Right.
I mean, unless you're above 10. If you're above 10, you want to look for a squeeze back up to 17, 18, knock yourself out. But just understand the probabilities are against you.
Yeah.
And that's okay. You might be okay with that. But, you know,
Yeah. Well,
like higher probability outcomes.
A lot of people that are there's a lot of people that are like have a very long-term view of PLTR. It kind of has a little bit of a cult following.
It does. Yeah, because what's his face?
Peter Thiel.
Peter Thiel.
Right?
Yeah, I read his book. What was that book he wrote?
I don't know.
He wrote 0 or 1. Zeros and 1, 0 to 1.
Palantir is more like a 1 to 0.
What was his book? Yeah, 0 to 1. I thought that was pretty good.
Yeah, I don't know. I don't know. I don't even know what they do. I think a lot of people don't know what they do.
Government stuff.
Government stuff.
Government
Big data. Yeah. What does that mean?
What's up? What's up, Brett Schaffer? Oh, it's Carrie. Carrie's using Brett's account. Carrie wants to know about Merck.
Yeah, let's ask about Merck. Let's see.
Healthcare, baby.
Relative strength.
Look how wide enough. Look at this. Look at this, baby. Look at that thing.
Now, see, technical analyst in me says this is a primo place to be short, but
yeah, fine. Hey, you short against 92.
Mm-hmm.
You're below 92, you short it. Yeah, go for it. Knock yourself out.
Mm-hmm.
I'd rather buy a breakout.
Yeah. Or a pullback from the breakout.
Yeah, the best breakouts don't pull back and retest. So
that's true. That's true. Good point. All right, let's keep moving here. N phase, ENPH.
You know, this one's been showing a ton of relative strength. This one's been on our radar for sure. You know, this stock, we ran a study. We wanted to see the stocks that had gone the longest without getting oversold and showing bearish momentum conditions. And it was like this one, and then like a trucker had gone like the furthest.
Huh.
Nice. So this looks like, you know, this looks kind of like the Schnauzer formation.
It's the the giraffe,
you know, the Schnauzer,
the seahorse.
How do I delete this thing?
Right click on it.
Oh, yeah, it looks kind of like a Schnauzer. Doesn't it look like a Schnauzer?
I could see it.
Like the neck, and this is like the face of the Schnauzer. I guess the Schnauzer would be declining more here. You know what I mean? Kind of.
Yeah, yeah.
You know, this is also, you know, you can consider this kind of like a high and tight flag. You know, kind of like a military fade, high and tight. You know.
Right. How do you go about finding targets in scenarios where we're essentially building bases at all-time highs and then we break out of them?
Yeah, I use the Fibonacci extension levels. Right?
Okay.
So here, let's see. Where's the Fibonacci?
Just below the up. It's like halfway in. Up 2 more. Right there.
Yeah, so I'll take the high down to the low.
Okay.
And then I can change the properties here. Well, so I don't need this one. I don't need this one. I don't need this one. I don't need this one or this one or this one. some more.
Just type them in there. Type in the ones that you need.
Where do I type them in?
Just the ones you removed.
Got it. So what I got 261. So 423.6. How you doing?
4.236. No.
And then 685.4. How you doing? And then we got 1109. How you doing? Then we got, see how good my math is. What is it? 17? Is it 1797.1? If that's the case, you know, damn, what's the next one? It's 17. See, you forget at the old age. What is it? 17?
The old age. That's relative, sir.
123. Come on, somebody help me out. Right, you know, what's the damn number after 1109? It's 1797, 1798, whatever. This is enough. That doesn't, how come it's not showing?
Well, it's showing, but it's way, 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 way up there. Are you just looking for like additional extensions?
6.854.
Yeah, right. There you go.
Oh, I'm right. Hold on. Oh, yeah. 4.236. Got it. Right?
Ah, okay.
Is that better?
Yeah, there you go.
That was a little outrageous there, huh?
I mean, they're up there, but they're way up there.
So that's really how I look at it.
Got it. And these are multiples of 618?
These are all of these levels are when you, along the Fibonacci sequence, when you divide one by the other, you're going to get 1.618. If you divide one by any two over, you're going to get 2.618. If you divide by 3 over, you're going to get 423. By 4 over, you're going to get 685. By 5 over, you're going to get 1109, right? So that's all along the sequence. And then in the market, you see these things again and again and again. Bitcoin, stair step higher, perfect. Every single Fibonacci. You know, the NVIDIA chart, every single Fibonacci. Boom, 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 hit them all. The market respects these levels, you know, so we respect them as well. So when we're looking for targets to new all-time highs, we'll use those extension levels.
What explains why the market respects those levels?
You know, I just think that is, I mean, I think it's bigger than that. I mean, I just think it's part of the universe and how we behave. Like you see it in our own DNA, you see it in nature, in weather patterns, you know, you see it in plant life. I mean, just, you know, all over, you know, it's all over the place. I just don't think humans are smart enough to really figure out why it is that it's everywhere. I don't think we're smart enough, but listen, I look at 5,000-6,000 charts a week, easy, going on a zillion years. If I didn't find it helpful, I wouldn't use them.
yeah, for sure. I'm with that, man. I mean, it's a very like metaphysical, deeper approach. I'm with it though. That's cool.
Yeah, I mean, listen, for the end phase, I mean, listen, the relative strengths, I mean, you notice how these don't look like any of the other charts that we looked at?
Oh, no. Yeah, it stands in a league of its own for sure.
Completely. So the relative strength is uncanny. So you definitely want to keep a close eye on it.
Cool. All right, next round. ATHM, Auto Home. Never heard of this.
You know, coming off those lows, right?
Mm-hmm. Held pretty nice, frankly.
Right, coming off those lows. Yeah. Yeah, I mean, listen, you still got to deal with this guy here. You got to deal with all this overhead supply.
Yep.
Right? So you had former resistance. Turn it into support.
Yep.
So now any strength is going to run into that.
Right. So you're going to be a seller. If you're long here, you're going to be a seller near $60.
You know, depends on your time horizon, right? But there's going to be trouble there. So if you're, you know, right now you're in no man's land, you're right in the middle. So
right.
This is actually a good place, in my opinion, to maybe sell some strangles. You know, so you'd be selling the calls up near 57, be selling the puts down near 19, and you're just betting that it stays in that range. So to me, that's the better trade than a directional trade. Is a lack of directional trade, right? Because here we are above support, and then we're below resistance. So if you fade these calls and you fade these puts, you're just betting that it's going to stay in the range. That's a pretty good bet in this trade, I think.
You got to call Chicago Sean and tell him about this one.
I think he would tell you the exact same. I mean, I talked to
No,
Sean
I
a
know.
lot, and I'm
Yeah.
pretty sure that that's exactly what he would say.
Yeah.
And then
No,
he'd
no,
be like,
no.
well, you know, we got to get the 25 deltas.
Nah. He's always talking to me about these sorts of trades when we go on our hikes and things.
Yeah, dude. Yeah. So to me, I think it's important to first understand the environment that you're in, and then decide what types of tools and strategies to implement in that environment. This particular environment is certainly a messy one for auto home, and because it's a messy one, it doesn't necessarily mean that there isn't a trade. Quite the opposite. The trade is, in my opinion, a lack of directional trade and more of a just a, you know, you fade the wings. And then, by the way, if you really want to get fancy, you know, because if you're just selling a strangle, you know, you're going to have a high margin requirement. So that's something to keep in mind because you're naked on both ends. And the way to manage risk is if at any point it breaches either of those levels where the strike prices are, then all bets are off, right? You take it off because you're naked short. But if you don't want to be naked short and you don't want to have all of those margin requirements, you can buy the wings. So you're essentially buying an even further out of the money call. You're buying an even further out of the money put. And now you're hedged. You're no longer naked, and the margin requirement drops tremendously. Now with that, you can make less money now, which is what we don't like about it. But if it's a safer, you know, safer way to do it. But you'd make less money if you're right. So that's why we usually just do the strangles.
Got it. Yeah, and that makes total sense. I'm getting a message here saying that somebody in chat is talking about the that we've been seeing some end phase ENPH insider selling in the past week. We do have a little tool for tracking that sort of stuff.
For me, I'm more interested in the insider buying because the way I see it is that investors could be selling for a million different reasons. They could be selling to pay for a daughter's wedding, college tuition, just normal diversification. But to me, there's only one reason why they're buying.
Because they think it's going to go up.
Interested in.
Yeah, that's interesting. That's a good way to look at it too. I like that. Nice, man. All right, so we're about at the halfway point. If you're just tuning in or if you tuned in kind of late, thank you so much for being here. I'm Jason Kretsky. We are here with JC Parets from All Star Charts. If you are a TrendSpider user, we thank you so much for being a TrendSpider user. If you are not, we've got a 50% discount running right now for the 4th of July holiday. That's 50% off for 2 full years. So if you are considering getting on the platform, now is the perfect time. We're gonna get back to the charts. And we're going to VIX here. So this would be $VIX. Exchange agreement.
No love for the VIX.
No love.
You know what it does? It goes like this.
Yeah, exactly. Yeah. It's exactly what it does. Yeah. There you go.
You know, here's another one I'd be watching is regional banks. I'd be watching these. You know, this is sort of the shoulders from this like head and shoulders top sort of situation in regional banks. This is a really, really important sector. I hate to keep coming back to the bond, to the dollar, but the dollar for sure. And then take a look at bonds here. So these are the monthly candles for bonds. You know, really held in there. Right? Interesting candle. You know, what's interesting is that inflation expectations, right? 5-year, 10-year break evens, they peaked several months back.
Mm-hmm.
Everybody's like, oh, inflation. But how much of that is already priced in? Interesting candle out of bonds, right? Right at these former levels.
Mm-hmm.
Right?
Talk us through your thought process. What's your expectation?
Well, remember, interest rates absolutely exploded through 3% and bonds were crashing. Like literally bonds have gotten destroyed. It's like the worst year start to a bond market like ever or something. Bonds just destroyed. So this is was $120 trillion market. It's probably more like 114, 115 now. It got absolutely decimated. So what happens when all that money is coming out of the bond market, because the bond market is so big, it impacts other smaller markets, the US stock market being one of them. The US stock market is a third of the size of the bond market, by the way, just to put things in perspective. US stock market's about 40 trillion. 40 trillion in assets in the US stock market. Bond market's closer to 115, 120, just to put things in perspective. So when the bond market's having a heart attack, that's going to impact other areas. So as interest rates are going up, what ends up happening is that the growth stocks, these long duration growth stocks, the earnings estimates and the projections change dramatically with every little inch higher in interest rates. And like the fundamental community has these calculators where it really shows them, and I've seen them. Like it's crazy how much it impacts. So what ends up happening is that the bond market's getting slaughtered. It's putting further pressure on those long duration growth stocks, like software stocks. There's a reason why software stocks got crushed. All of the ARC stuff, biotechs, anything like where there's not going to be any earnings for a long time. You know, they're just growing those long duration growth. And then crypto is even further on that end. And then NFTs is even further on that end. So there you can get even harder. So all that those have been is a derivative of the bond trade. So if bonds can find some support here, I think that'll ease up some of the pressure in those growth areas. And what's really interesting is that in this last leg higher in interest rates and this last leg lower in bonds that we've seen over the last month, the NASDAQ actually outperformed the S&P 500. So the growth areas were actually already improving with that last leg higher in rates when it should have been the opposite. And Chinese internet is up 50% off its lows going back to March. So you're already seeing certain relative strength in certain growth areas that I think might be pointing to. And then, of course, the break-evens already peaked several months back. Inflation expectations already peaked. We have an equally weighted commodities index that equally weights all 33 commodities. And that also peaked several months back, you know, suggesting a lot of disinflationary pressures are already being priced into the market. So I think if the bond market can find its footing here, I think that could be good for growth stocks.
Interesting. All right, we're going to move on. ATGE. Never heard of this one.
ATGE, let's see. Small cap, $1.6 billion. It's a defensive stock. It's a staple. It's education and training services. This is ATGE. You know what's cool is that some of these small caps have a lower correlation with the overall market. And some of these large caps here, you could see this doesn't look like the S&P 500 at all, does it? It's like it's trading in its own thing. It's like Notre Dame, right? It's made its own world. So listen, it's still in a range. Certainly looks better than most other stocks. I'll tell you that much. But you know, from an absolute basis, you know, there's not really much to do here. We're stuck in a range. You know, this might be another one of those candidates for, you know, selling some premium. I mean, here we're looking at a monthly chart, so it might be a little further out. But you know, there's a lot of trouble here, a lot of resistance, some former support. You know, all this former support, that's going to be trouble, right? Yep. And then you got all this former resistance, that's still trouble. So you got like just trouble, right? So, you know, this is another one of those scenarios where perhaps, you know, being a seller of premium and just betting on this continued mess, you know, maybe sell the 44s up to the top, you know, maybe sell something like this, but it's too far. We're like in no man's
land. So far. Yeah.
Too far. You're not going to get much juice at all. Yeah. This is a tough one. I don't really, there's not really much to do here. Even selling premium is really not that easy. Looks harder. Looks like too much more trouble than it's worth.
There's too many easier
squeeze.
Yeah, there's too many easier setups out there to be fooling around with this. I hear you. All right, keep on moving on. Next round is MCK.
Yeah, we were just looking at this McKesson today. You know, kind of like phase. Looks
kind of
end
phase,
doesn't it?
Yes, sir.
A lot of relative strength. Weren't you hating on healthcare stocks? Why are you hating on healthcare, bro?
I wasn't hating on healthcare. I was saying I've just been hearing a lot of people talking about healthcare stocks lately. I don't really trade them. I don't touch them because I don't know anything about healthcare. But
I don't know anything about healthcare either. I don't know anything about any of these sectors, but that's another story. I know about baseball, I know about wine, and I know about charts. I don't know anything about healthcare.
There you go. I mean, the chart tells you a lot of what you need to know, frankly.
Yeah. They're not selling this one like they're selling all the other ones. That's information.
That is right. So it's the same type of deal here. You would probably use some fibs to try and figure out.
Buy a breakout out of this consolidation. That looks good to me. Look at Bristol Myers also. If we can,
Same deal.
It's a messy start, but if we can hold above that, because look what's going on here in Bristol Myers.
All-time
Right?
highs.
Look at that. It's a big base.
All-time highs this month, huh?
What do they call that? Cup and handle. Here's your cup. Here's your handle. Right.
Right.
You're above those March 2000 highs. Actually, those are November. Those are end of 99. So end of 99. Look at this relative strength. Look how interesting this is. You see how Bristol Myers had already peaked in October of 1999. So then by the time March of 2000 came, look at this. By the time March of 2000 came, this thing was already in decline, showing that relative weakness. And then it got absolutely destroyed. So this relative weakness here is now showing the opposite, showing relative strength. Really fascinating, right? That's why you need to know your market history. Because if you know that this peaked in October of 1999, you know that it peaked months in advance of the overall market, showing that relative weakness. And then look what happened. So when you see that relative strength, that's really powerful coming from this area. There's a lot of market memory in this area. A lot of mutual funds own this stock from these areas. So if you're finally able to break out above that.
See ya. Interesting.
Seen it before.
Right. All right. We're going to JKS. Old Jinko Solar.
Listen, also impressive. Very impressive.
Yeah.
Very impressive. Right? Similar to NVDA.
Yep.
Right? So you got your resistance. You got your resistance. And then support. Right?
Super clean.
Super clean. That's what you're looking for. Right? So look at a weekly chart. See that?
So a few minutes ago, you were talking about the potential that the bond market might be kind of suggesting we might see some rotation back into growth. How does a rotation like that, pending it happens, how does a rotation like that affect stocks that are sitting like this, right about to break out, or looking like they're about to break out?
I want to look at it like a beach ball, right? My friend Joe Fahmy, this is how he put it, and it's the best thing I've ever heard when it comes to relative strength. Think of it like a beach ball. When you're holding a beach ball under the water, you know how like you could feel it put pressure up against your arms, like it wants to go from under the water to above the water, right? You know what I mean?
Yeah.
Right? And then when you let go of the beach ball, it shoots up in the air, right? So relative strength is kind of like that. When there's pressure on the market and a particular stock is pushing up against resistance while the rest of the market is under pressure, when that pressure lets up, the price shoots up like the beach ball would out of the pool. You see what I'm saying? It's the exact same thing. So think of it like that upside pressure.
Got it. Interesting. That's a good analogy. I like that. I've never heard that before.
Joe Fahmy. I'm not going to take credit for it. That's Fahmy.
Shout out Joe Fahmy.
Yeah. Shout out Joe Fahmy.
I've listened to many of his Twitter spaces for sure. I know what's going on with your memory, man.
Shut this down. Hold on. Sorry.
No, you're all good.
I just want to shut this down because it's just slowing it down. Did I get it? Sorry, guys.
What's up? Do we have any other questions in chat?
I got it. There we go.
We good?
Yep, we're good.
All right. Nice. All right. Well, then let's keep on moving. We're going to go to ABBV. ABBV.
I was just looking at this chart today, as a matter of fact. I mean, I guess I was looking at a lot of charts. I feel like this is like the fifth time I'm like,
you're always looking at a lot of charts. This is how you operate, man.
This is what I do. I guess I should stop saying, I was looking at this chart today. I was looking at a lot of charts today. It's just another day. No, but listen, you talk about healthcare stocks. I mean, this has been the best healthcare stock of them all, has it not? Medical equipment, baby. Because medical equipment is like Notre Dame, right? Medical equipment is because you've got, it's in the healthcare sector because it's medical equipment, but it's really technology, right? So it's like just like a very confused, industry group, right? Is right because it trades, because it trades with technology. You know why? Because it is technology. It's just trapped in a healthcare body, right? But AbbVie, has really been bucking the trend. I mean, when it comes to relative strength, AbbVie has just been an absolute beast. Notice how, look at that former resistance in January of 2018, and like we haven't even retested that. Like that's a ton of relative strength. So I would right.
1.618 coming in again.
What's that?
That 1.618 coming in again.
This one, for some reason, is the 123. I don't know what this says, but I don't want that. Hold on. Where's
level
this?
8 there on the far right middle?
Oh, yeah, here we go. We don't want you there. We want the one guy. We want one. There you go. Yeah, there we go. Yeah, see? 61.8 came into support, and it failed up here, right? We got a little bit of a whipsaw, right?
So how would you play this if you were looking to go long AbbVie? What would you be waiting for to gain those highs, the 1.618, or would you be looking for the pullback to the kind of the
This is one
previous
of
high?
those things where it's just in no man's land.
Yeah,
So
exactly.
maybe sell these calls, maybe sell the 167s or something like that. Maybe sell the 126s. Just play the range because it looks like it's stuck in this range. That's probably what I would do if I had to do something in this particular trade. I think if you're going to put that trade on, there's easier places to do it. But if I had to put a trade on, I'd probably sell the wings.
Okay, cool. All right, let's keep on moving here. We got Shop up next. Talk about one that's been getting absolutely hammered. I see it's trading like $30 right now.
If you're buying this, I think you got to be pretty hammered, right?
So this is I guess maybe they reverse split. I think is that what happened?
Here, did they come up with a new cancer or something?
I don't know.
Listen, the bottom line is these are gross downtrends. Just terrible, gross downtrends. If you like buying that sort of thing, like knock yourself out. But like, I mean, literally pushing down against new lows reminds me of the gold miners.
It's kind of the inverse of it's the inverse of end phase in those sorts.
See how it's breaking down to new lows?
Right.
It reminds me of that one. What was the ticker symbol for this hot piece of garbage? Shop. I mean, look at this thing pushing down against new lows. I mean, if that's the type of stuff, the way I look at it, over breaking down to new lows. The way I look at it, the only way to make sure that you own the strongest stocks is to buy the strongest stocks. Yeah. And these just aren't that.
Right.
It's just not that. Some of the ones we looked at for sure, but not these at all.
Right.
GDXJ, new lows on the junior gold miners. I mean, these things are just, look at junior silver miners. Ugh. Freeport McMoran. Materials just sucking it up. Look at industrials. Man, looks terrible. Look at financials. Man, they really need to get their act together quickly because, in this environment, bad things can certainly happen in this environment. There's a lot of similarities to the summer of 2008 right now, where we're sort of in the eye of the storm. So until the data changes, like that sort of stuff is on the table. So we really need the data to change ASAP. So the question is what we're seeing in China, what we're seeing in biotech and some other areas, sort of like a heads up that things are turning. Maybe the bond market stability, that could be a heads up that things are turning, but the data needs to turn right away because we're going on 30. This is going to be a 32nd consecutive week of more stocks making new lows than new highs. That's not what we see in bull markets.
Right. Crazy. All right, let's keep moving here. Roblox, RBLX.
Jesus.
I think this is another ugly one.
They're like, come on, guys. Like,
higher lows. Let's give it a little bit of something.
Biotechs. Yeah. Kind of looks like biotechs, doesn't it? Looks exactly like biotechs.
That's so crazy. It does. It's the exact same chart, isn't it?
Yeah, look at the IPO index. Looks exactly the same. Right? Look at the ARC funds. Looks exactly the same.
Yeah.
Right? It's all the same trade.
Whew. All right. Zoom. It's going to exact same thing.
Dude, the exact same thing. You kidding me? Exact same thing. Lower lows in May, right? Nice little bounce and just dead money. Just these things are just, man. So the question is, are these things all going to roll over and make new lows, or are these higher lows? Are they trying to hammer in a bottom like the Japanese say?
Right. I mean, that's the big question, right? That's what I'm asking myself all the time.
I think it's going to come down to the dollar. I think this is it. I really think this is going to determine the next direction for equities and risk assets. There was a big reversal today in the dollar index, and caught a little bit of a bid in stocks, a little bit of a bid in stocks.
Mm-hmm.
Now the bid's back in the dollar index as we're recording this. I think that's really what it's going to come down to. I think if the dollar's, the dollar has really proven to be the area of strength. I mean, think about it. Stocks have gotten slaughtered, and so have bonds. So has the Japanese yen, right? These are historically the safest of havens, but it hasn't been the bond market. It hasn't been Japanese yen. It's been the US dollar. This has been the safe haven. So if the safe havens continuing to go higher, what's happening to the not so safe havens?
And it's part of my ignorance here, but how is it possible that the dollar is continuing to gain against the insane amount of printing that we've done over the past 2 years?
Well, remember that it's not just the United States that's been fiscally irresponsible. Everything is relative, and particularly in the currency world, you're comparing. It's the dollar compared to the euro, dollar compared to yen, dollar compared to British pounds, Canadian dollar. So it's more about that, but it's less about how much they've printed and how much we've printed as it is a safe haven. As risk has come off, European stocks are down every single month this year, for example. Right,
Right.
the U.S. dollar has proven, right. It's not, you can argue years back that the Japanese yen was very safe haven, the Treasury bond market was safe haven. In this last cycle, none of those things have been. They've gotten hit as hard, or if not harder than stocks. Right. It's been the dollar.
Got it.
Like we can go back and forth as to why and da, but it doesn't matter why. It just is.
Yeah. All right. I mean, that makes a ton of sense. All right, let's keep moving here. Next round, NVDA. Probably the same chart, huh? Oh, even worse.
Yes, semiconductors in general have really they're breaking down on a relative basis, making new lows.
Yep.
This really needs to change ASAP.
Yeah.
The trends continue to stay down, and it really is up to the bulls here, right? It really is up to the bulls. Is how I see it, right? So if we're below these levels, right?
Yep. Yep.
Right.
And it's a long way back to something that looks like a base from here.
I mean, we got to get back above these lows. We got to get this. This is the semiconductors. We got to get back above 228 for us to have a real conversation about what we're going to do from the long side. And then NVIDIA, see, NVIDIA's got all this form of resistance here that's turning into support, right? You see that? See how it all keeps coming back to the same thing? Form of resistance, turning into support. Like, we don't have to complicate this at all, right?
Right.
And then here's your support, right? So, for NVIDIA specifically, it's interesting because semis already broke, right? So semis already broke down. So you're waiting for semis to squeeze back above 227 or so. But then on the NVIDIA, you're still holding above those former resistance levels. So you really need to see it hold 150. Above 150, if you want to give it a shot, buy down here, knock yourself out. But the trend is still down. So you're betting that it's just going to reverse. If it's going to reverse, this would be a logical place for it to do so.
Yep. Yeah, and then it's just what makes it reverse. I mean, it's got to have knockout earnings. Like what?
I mean, it doesn't necessarily need a reason. Just more buying pressure than selling pressure. At these prices, people are like, well, more buyers and sellers, and people are like, well, JC, every trade has the same as one buyer and one seller, and it's like, well, yeah. So like every trade has the same amount of buyers and sellers, right? There's always the same amount. The problem is not the problem, but the difference is that there aren't the same amount of buyers and sellers at every price. Right. That's why it moves.
Yeah. Right on, JC. All right, so we are at the hour mark here. You want to do one or two more and wrap it up?
Yeah, let's do it. What do we got?
All right, we got TMUS, TMUS. That's T-Mobile.
Yeah, I mean, listen, not bad relative strength here, right?
Right.
Doesn't look as terrible as some of these others. Look at this monthly chart. Doesn't look terrible, huh?
Doesn't look terrible.
Doesn't look terrible. Now, from an execution standpoint, we're still in this range, right? So it's not as clean, right? We're still stuck in this range, right? So what do it's kind of messy,
Right.
right? Maybe sell the calls on the high, sell the puts down here, but you're a little too far.
It's a pretty big spread. $40, $50.
Yeah. Listen, you could sell the 121s maybe if you can get enough juice. Sell the 150s, 15 points in either direction. That might be a little much, but that's what I would do maybe.
Cool. All right. We're going to wrap it up. Last one, CVNA.
Oh, yes.
I can't believe Bitcoin
come up in conversation.
Oh, God.
It's a real darling, this one. Look at this one. Not for the faint of heart.
That looks rough.
I mean, look, there you go. Those are your levels.
We can't end on this.
Look at that. Those are your levels. It all comes back down to this. You notice?
Oh, yeah.
Notice, Jay? It all comes back down to this. Every time.
Yep.
You can't make
Every
this stuff
time.
up. Support and resistance, baby.
It's the way. Do you want to end on a better one than this?
Yeah, we can end on a better one. Let's see
what. Well, the next one is CELH, Celsius. I don't know if it's better.
Celsius Holdings.
Relatively better.
LH. Celsius Holdings.
This is they make energy drinks.
It's a staple. It's a $5 billion consumer staple. Doesn't look terrible, actually.
The seahorse pattern.
Still in that range, though, right?
Mm-hmm.
Still in this range, kind of like the one that we're just looking at, sort of.
Yep.
In the middle of this massive range. Here, I got one for you.
Very similar looking too.
Yeah, right. This is an insurance company, property and casualty, 18 billion. Right, showing just ton of relative strength there.
For sure.
So these are the charts that I'm mostly interested in. That end phase one, the one showing relative strength. You notice how this one just doesn't look like any of those other ones? When you guys were like Zoom and Shopify and like all the war stocks in the world, like literally. This one looks like the opposite, doesn't it?
Yep. Do you have a favorite long idea right now?
I'm long crypto. I'm long the Avalanche as a vehicle to trade Bitcoin. I like it against that like 19,000 level, those former lows. We bounced a little bit today, but instead of buying Bitcoin, I own Avalanche. So that's my trade. So that's my long duration, betting that there's going to be some bond market stability going into July, and that's my beta bet, because I can get the juice by being in the options market, but options premiums are so expensive that I'd rather get the juice in crypto.
Interesting. Cool. Do you have a favorite short idea?
We're short eBay.
eBay just bought what did they just buy? Like an NFT exchange.
Why am I not surprised? Yeah, we've been short eBay. I mean, listen, as long as we're below those former lows, 46, 47, I like sticking with it. Short some volatility up here. I like that. Selling the wings. I like that.
Right on. Well, JC, man, this has been so much fun. I've been looking forward to this for a minute. So thank you so much for being here with us tonight. I know everybody watching probably enjoyed this as well. Any last things you'd like to say or promote or anything like that before we get out of here?
Oh man, just nice to be here. Always a pleasure. You guys have been friends since day one, All Star Charts and TrendSpider. So really appreciate it. And then you guys are making a donation in my name, I guess, to St. Jude's. So I really appreciate that. That's an organization that means a lot to me and my family. So appreciate that.
Awesome, man. Well, again, thank you so much for being here on behalf of myself and everybody watching. We do really appreciate it. Can't wait to do this again with you. And thank you to everybody tuning in for tuning in. Hopefully this was, hopefully you guys enjoyed this. We tried to get to as many tickers as we could. Looks like we got through about 20 of them. So, and then all of the extras that you kind of ran through while we were
nice. Yeah,
cruising
can't help
around.
myself sometimes.
Yeah. Well, right on. Again, JC, thanks for being here. Thank you guys for being here. We're going to do this again next Thursday night, 8 p.m. And again, that 50% off for 2 full years for the July 4th sale is going to be good through July 4th. If you are considering an account with us, now is the perfect time. 50% off for 2 full years. Yeah, that's it. That's all I got. So again, thanks, JC. Thanks for tuning in, everybody. I hope you guys have a great rest of your week. Have an awesome long weekend, and we will see you again next week.
Adios.